Hello, Dave Knight here at 123daytrade.com. Thanks for watching. Thanks for being here. Today is Saturday, March 10th, 2018. Today, officially, I turned 51. So I was hinting towards something that I'm planning on doing in not this week, since my wife is going to be at the Epilepsy Center or the UPMC Presby for the week. I need to make myself available. I'm planning on trading. Um, Sporadically for the week, or maybe not even at all, or just just to get up to 10 trading days right now so that I can win on one trading day. Long story short, what I want to do, and I also want to talk about trading in some of my notes and where I'm planning on going, but the Journeyman trading course that I'm putting together, or at least I'm planning on, will be held on whenever the inventory report will be over the next 5 weeks, starting not this Wednesday coming, but the week after. I think that'll be the 21st. Yes, the 21st of March. We'll be in a new futures contract at that point as well. So we'll be off of the current contract into the next month out, which would be a good time. So we're not working inside the third week of March to make a trading decision, which can be kind of difficult at times. Um, so so the first week, once again, will be free for anyone to come in. And then the next 4 weeks after that will be a paid, basically to keep away the Freddie freeloaders and all the people the tire kickers and anyone along those lines that want the free lunch, because there is no free lunch. There is no such thing as a free lunch. My time is worth something, whether it's worth the dollar amount that I put up. That's for you to tell. But my best trading strategy and the Journeyman course is what I'm putting together. So the crude oil, what I call it, CL pit strategy, crude oil power. I don't even know what I call it anymore, but inventory trading strategy is what I'm doing. In the month of February, it was positive. So far in the month of March has been really good. That was the day that I pulled out. I believe it was 95 ticks that I pulled out on that trading day, or it was the day prior to that. I'm pretty sure it was the $110 or 110 tick winning day. That day was on the inventory day. The month of February, I believe it was net positive 80 something ticks overall, or 70 something along those lines. So trading one contract, by the way. So it is a powerful trading strategy that I have in my arsenal. Yes, I do favor the short side of the market. You could argue that February was short, but I could argue that it was both ways. It was short and long. I think the losing days, the market probably went up, and the winning days, it went down. Um, so is that 50-50? I don't know. But long story short, I try to be unbiased on that trading day as best I can. So with that being said, I also want to talk about yesterday a little bit. Um, what I wrote down in my notes when I first started on Friday before the market, before I got trading. And I said yesterday CL went below $60 a barrel for a couple seconds before rebounding off of it. So it went down to 59.95, and I think that kind of overrode all of my logic that I wanted to put into the market on the long side, because obviously I kept seeing the market a different direction. That I believe that we were going to top out and then head back down. I still believe that we're going to top out and head back down, but the futures market is saying otherwise right now, and it's been a little bit chaotic in the market, and that's good. Velocity means it's up, volatility is up. That means the longs and the shorts are both winning on both sides of the market. They're just as hard as the market's going down, it's coming back up again. So both sides are winning and making money. Now, with that being said, to be able to see the long side a little bit better is kind of the overriding theme right now that obviously that I've been working on. When I say that my trading strategy at this point is about 85 to 80 to 85% complete, the difference right now is how I handle the long side of the market. You know that I'm quite confident and competent on the short side. When the markets are making lower highs and it's trading in between. Actually, I wrote some notes here. I said, um, when the market is trading, a lot of my winning days are coming in between when the market's trading pivot point and S1, and a lot of my losing days are coming when the market's trading in between R1 and pivot point, or basically it's going pivot point to R1, not R1 to pivot point, but pivot point up to R1. So when the market is making a series of higher lows or higher highs, however you're going to look at that. Higher lows is what I look at basically when the market's going in an upswing, and I look at lower highs when we're in a downswing. So that's the two patterns I guess you can say that I look for. I'm really good at seeing the lower high pattern, right? So that's been my strength. That's what has got me into the through the combine, through FTP, and I've proven that you can be on one side of the market and win. Now, the other side of that is if it's not, and I think Carpet even actually said this a little bit, Carpet Hooligan, if you can't see one side of the market, then stay away from that side of the market until the conditions warrant to get back into that market. That's a great point. But let me also say this too, because when you look at Top Step Trader and you're looking at fees, one of the things that and maybe I know it's a wrong mindset going in, and I'm going to tell you it's a wrong mindset because you've got to divorce day count away from your trading strategy. You got to allow the market to do what it's want to do on any given day and not worry about, another extra fee that Top Step Trader is going to add to your trading account. Because in the long run, even if it does, if I have to pay another $150 to move to the next stage, and that's what really sucks right now. What happens if you pay that $150 and then you pass the next day in, you're still fucked out of $150, right? I don't think that is a fair way of going about it to start with. So I disagree with Top Step Trader charging after you get out of the combine. I think that, once you go into, and that's because I'm old school right now. And old school is like what, from the beginning of the year? That FTP, you're getting charged in FTP. So there is no break of a charge. So you're either going to be charged the 150, or if you're trading crude oil like me, you're going to be trading, and when you get to the funded account, you get charged another $85. And by the way, I'm going to say congratulations to Kip, who just made it into funded. Best of luck to you. Keep that powder dry as best you can. Stay funded. Do better than me. I always tell everybody that asks me and gets in there, do as I say, not as I do, right? So go stay in funded, be able to stay there. Be strong, my friend. So how do I correct this thinking? And obviously your viewpoints are important too. So write some of that down below in the comment section. What I believe more times than not that leads to my losing is obviously the bias of seeing everything through the eyes of a short side trader. And let me go and tell you why I feel that way, and I think you'll agree with me. As a short-term trader trading in the crude oil market, pretty much almost every long position that you put on, more times than not, will go your way. Let's just say, 50, 60, 70% of the time, if not greater, that market will initially go the direction that you will want to. And it might even go, like a lot of times for me, it might go to a 1P target. But then what happens? And if you said it comes back and backfills and knocks you out at break even, you're correct. Why is the tendency of an up market more apt to come back to your entry point as opposed to the short side market that more times than not will not come back up to your, after it goes a certain distance, it doesn't come back to a certain level? Or is that just my bias speaking? What I'm going to tell you is the long side of the market, and why I favor the short side is because of this. It's because of all the break-even trades that I've seen in my records in my account over going long, over seeing the market more times than not, me be putting myself in a great position, and if it doesn't take me out, very few times this market, once it gets to my 1p profit target, does it not stay, do I get to be able to stay in the trade? So then it comes down to how far does the market got to go up to get to break even? Because if 1p is not enough to go to break even, how far do you go? I mean, do you trail it behind it? Do you look at certain, and it comes down to being able to allow a little bit more room on the long side of the market. And when I go back and back test everything, there's a point in time and a point of control that the market turns over from long to short. And that is where the bias in the very beginning of time came from. Because more times than not, I would be long, it would be going my way, and then it would run through, and then the market would go down like 50, 60, 80 ticks, 120 ticks. So a lot of these days that you see me making these big winning trading days are days that initially, even the day that I think I made the 110 tick day, initially that market went up and then it sold off and went down. Actually, it went down a lot greater than 110 ticks that day. It went down. That's the day that it actually went to 59.95 later on in the trading session. But if you go into that trading day itself, the initial thrust of that trade went up, I believe. I could almost be positive that initial thrust, and the day prior to that, the initial thrust of the market was up and then it sold off. So that, in the nutshell, is kind of the thought process. But the thought process is what is the overriding market doing on that day prior to you starting your trading day? And what I'm going to tell you is what I'm going to look at least hopefully, knock on wood, and the creek doesn't rise, is to look at what's going on the, instead of the right edge, looking at what's going on the left side of the chart. Left versus right, the right edge and the left side. So the left side is the known side, and the right side over here is the unknown. That's we're trading on the right side of the right edge. But the left side of the market is where you can look back and say, all right, what's going on right now? How's the volume reacting to certain levels? And you start, if you've been watching my videos, you'll start that I'm defining a range inside of a volume figure. And I actually put that on the chart on Friday, and I think I did it in the week prior that I put it on the chart, and the market never went below this certain level. There's some strength to the argument that if it stays above a certain amount in a certain area, that the market is stronger than it is on the long side than it is on the short side. And that is kind of the culmination of maybe the extra 15 to 20% of the trading plan right now, is to recognize that, maybe for lack of a better way of saying it, there's a band that if the market stays above this band or this range, so it's more prone to stay up, and if it goes into the band, it's more prone to come down on a long side trading day. So that's kind of the overriding thought that I'm getting. So if I can say, all right, this is the base, for instance, or the foundation, for lack of a better way of putting it, but let's just call it the base. If this is the floor of the market, that obviously it can go through it, but if it stays above this floor, the market's more apt to stay up until an event or some kind of volume or some kind of something another comes into the market to prove that the market's done going up in this case. So that's kind of how I'm leaning to correct my overall problem that I have with seeing the long side of the market. So today could have been a good day to be a long side trader, being Friday. I mean, the hell, the market went to $62 a barrel. So here I am shorting the market and getting caught. And I even called out a long inside there. I believe it was around 61.40 something, where the market made a lower low on not a lower low as far as the day, but as the market was coming down, it was a divergence in it made a lower low, but the Williams percent R showed a kind of the divergence pattern that gives you the ability to say, hey, if the market gets above this line, it should go long. And I saw it. So there's still good inside of the bad. And that's what I'm glad that I can see this stuff. Now it comes down to the point of trusting where that turning point is to switch my bias. Because if I'm going to stay in that short side bias, which has been honestly quite profitable for me to be in a short side bias, and even in a up moving market, it still is profitable. And I explained why it is. It's because of the backfilling. It's because when the market comes back and comes back in a hurry, more times than not, it knocks you out at no better than break even, unless you have a lower stop. And then you put yourself in the point that you should be short in a trade that you're getting out on your long. It's lots to think about, isn't it? It's a lot harder than you think. When you start really getting into the nitty gritty of trading, and I'm not convinced that you should have a bias one way or the other. I'm not convinced that my short side bias is a bad thing. I believe that if I want to stay short side biased, then I've got to recognize where those turning points of the market, and maybe that is that extra 15 to 20% I'm talking about, that I'm going long, that I'm physically doing what I call the Bugs Bunny side of my trading strategy and reversing my thinking, or basically, like a better way of putting it, right? I'm doing a little bit of this. I'm turning myself upside down and seeing the market in a different way. Hopefully that visual is that's pretty spooky, I know, but that visual probably could be helpful. Now you might have the opposite side. When I first started trading, I had the opposite side bias. I was a long only trader and never traded short. And now I'm the other side. And I've told you why, but let me refresh your memory why I like being short. Which side moves quicker more times than not? When you see a market that takes an hour and a half to go up, you know that market can fall in 30 minutes even lower than that market went up, and it completes a triangle, right? So you see a lot of times saying that, can it complete this triangle? A lot of the times it's completing the triangle as the market has been, when you look on the left side of the chart, you see lower high pattern coming in, and then it's a continuation of that day. And a lot of my wins, like I said, are coming when I'm taking trades in between pivot and the S1. So pivot going to S1, and a lot of my losing days are when the market's going from pivot to R1, not when it's going from R1 to pivot. So let's get that out of the way right now. So if I want to be long side trader, the market needs to be moving basically pivot to R1. Now, but obviously if it's trading R1 already, then I should have a long side bias coming into that market, unless something is coming along the lines to prove that the market is weak right there. And that's got to be volume. So that means that the greater tendency of the market to go R1 to R2 is much greater if you've already breached the R1 mark prior to your trading even coming in. So that's the stuff that I've got to see. And it's just taking the reverse of what I believe going the other way. When the market's trading below the S1, I believe firmly that the market can run S2 and below on that trading day, because the greater, and it comes back to the path of least resistance. What is the path of least resistance? By the way, this is my training prior to us getting into a classroom environment for March 21st. So Um, so here I wrote in here, but all I saw was a short side of the market. My bias needs to be long when trading between pivot point and R1 in a rising market. So that is where I'm telling you that I am going to try my utmost best to be that 15 to 20% of the time the market is going the direction against my primary bias. I'm going to stand on my head and let that market take me where it wants to go. Hopefully you can keep me to that, because that's what I'm telling you that I want to do. Yeah, I'm kind of finally getting to the point where I'm comfortable in my own skin and how I'm going to trade the crude oil futures market. A lot of my testing to this point, when I started back in October of last year, 2017, a lot of my testing is completed now. Most of my ideas have been put to the crucible of truth. So now we're just working in the last bit of correcting and fine tuning what I'm doing wrong right now. And it says, and I go, and so I said, this is, so going long in a rising market that's going from, say, pivot to R1, and I am good in a falling market when the market is trading between pivot point and S1. So where is my sweet spot on both sides of the market? What my sweet spot right now is when the market is making lower highs and we're trading between pivot and S1. That's my sweet spot. That's where I'm making most of my money as a short side trader. Or a market's moving from R1 to pivot in a falling market. That is where I'm making the majority of my short side money. Where I'm losing the majority of my short side money is when the market is moving into a rising market and it's making higher lows. And I'm trading, trying to pick off that top. And ideally, this. It's like I'm preaching to the choir right now, because some of you have already mentioned, this is what you're doing wrong, blah, 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 blah. And it's hard to teach an old dog new tricks sometimes, especially when he sees that the long side of the market, more times than not, I would tell you the long side of the market sucks 80, maybe not that. Yeah, it does. It does. I'll give it 75%. Every long side trade between 75 to 80% of the time will come back to whatever your point is. If not, take you out at your stop loss. It's greater than the 35% time that the market is moving into the direction that you believe. So in other words, if the market's making lower highs, my odds of success on that trade end up being 65 to 70% of the time. Where if I'm trying to take a long just arbitrarily, that long is about a 25 to 30% winner. But if you catch these turning points, if you catch these markets inside of a rising market, all of a sudden the odds start turning and switching to your favor to the long side. So in other words, instead of being 30-35% long side winner, what I'm noticing is that market could be about 65 to 70% on the long side and not come back to that effing break-even point. That is the point that I'm comfortable with being on the long side of the market. So what's the sermon? It's like, what's the sermon? What's the message today, David? I'm going to stay biased short with, I would say, between 75 to 80% of the time. If the market is in a rising market, in other words, making higher lows, and you're looking back to the left side, I am going to flip my thinking over, and until proven incorrect, I'm going to try to stay on the long side of the market. If we're trading in a trading range, because there's three things the market can do, right? It's either making higher lows, lower highs. It gets confusing after a while. It's either making lower highs, or it's making higher lows. That's the two things that I want. That's my takeaway for you right now. When you think about the takeaway from this message today, there's three things that market can do. It can be range bound, right? So you got to define the range. Those are the markets that unfortunately all of us screw up, because that's all in the eyes of the beholder is what is a range. What might be a range for me might not be a range for you. What I see as a range is different than what you see as a range more times than not. So, but what you can and what we can both agree on is that the market is making lower highs or higher lows. We can agree on something like that. So in other words, is the market rising or is the market falling? That's something that both of us, all of us, can agree on. A rising market versus a falling market. So the trend side of the market is what you got to trying to find that trend inside of the day. So, and it doesn't matter. And then it does matter what the short term swing side of that market is doing. Is the market coming down or is the market going up? And so you can further define a rising market or a falling market based upon looking back 2 to 3 days prior to what the market's doing. Because a lot of times we know this. I mean, this is facts that we know. The market will fall 3 days, or the market will go up 3 days, or the market will go so many days in a sideways patterns. Those are things that we've all learned, but sometimes we just kind of like, we put it out of our mind sometimes. At least I do. So this was a very good learning experience for me today. The market is going to do what the market wants to do, regardless of what I think it should do, unquoted, against what it does. So as I wrap up this video and this chit chat with you, our close to Springside March chat on my 51st birthday. Once again, I want to thank everybody that watches me. My wife is working today, so I thought I would put this together. I wanted to gather my thoughts before I put this out, so I didn't want to put it out yesterday. I wanted to gather my thoughts and really sleep on it and come back and kind of get a hold of what I'm thinking, and then put this on film for you, or video, whatever you want to call it, and show my thought process in real time, right? So I'm feeling pretty confident that the last pieces of the puzzle are falling in place right now. So then it's going to just be a matter of odds at that point. If I can put myself on the right side of the market at the right time, then it just comes down to, will I stay in the trade or not? I can live with that. I can live with being on the right side of the market at the right time and losing that trade. I can live with that because of my stop loss is too close, or for a variety of reasons, as long as my thinking is correct. So I can live with that component. So what I've been struggling with is what we talked about today. So, okay, so wrap up this almost 30-minute chat today. There will be a course that I'm putting called the Journeymen Course. It's where I am at this part of my life. I trade the crude oil futures market. So if you don't trade the futures and the crude oil, this might not appeal to you. But what I'm taking is what we're going to do over the next 5 Wednesdays, starting or whenever I'm pretty sure next 5 Wednesdays, or let's just say whenever the inventory report is going to be released, that's going to be the day that I'm going to put a live room together with some training. Starting on March 21st, or what, about a week and a few days away from today. And I'm going to go through Demio, which I used prior, that's pretty damn good at staying on top of the live market right now, and it's a good platform to use. Um, that is the overall plan. It's my gift back to those people that have followed me. The gift itself will be that very first trading day on the 21st, that you can just come into the room and watch how I handle the market and how I go about trading what ends up being my favorite trading strategy against the market, where I win more times than I lose on that trading day. And I've said this before, if I had to pick one trading day a week to trade, I would pick the crude oil futures market, one, and I would pick number two, what day of the week would be the inventory day. Whatever day the inventories are coming out, that would be the one day a week that I would put on. I believe in my heart of hearts that you could make a success of trading only trading one day a week. And hopefully I'll get to that point in my futures career where I'm trading 10 cars, just trading that one day a week. Away and I love Top Step Trader. I complain about them only in the minute area of the fee side. But if you take away that, the cost and the barrier of entry is so, and they're giving you money, and it's their money and it's their gold, and you got to follow their rules. So when I complain, it's just the little minute details that I complain about, having to pay for FTP, having to pay the $85. You know, the fee-centric basis that I talk about. With that being said, it's much easier to give them, even with the resets, a couple extra $100 than losing $2,000 to $3,000 in any given trading day. And that's where most of us fall. That's where most of us fail. And that's why this environment can be so good for you as a day trader, getting your shit together, just as I have to get Imano shit together too. Mine, my own shit together in German, right? I guess that's about it. You know, I just want to say thank you for watching. Thanks for all the comments. Thanks for keeping me honest, all of y'all, you know, and you know what? Tons of fun. That's your nickname, by the way. It's a love-hate relationship with us, right? Um, if you stay off of the negative personal attacks, I'm fine with you posting. You know, just think twice before you hit that enter button, right? Because in the long run, I'm a human being. And yeah, I am a dad with two boys, and I pro NRA. You can go with whatever that is, whatever you want to think with that. But I still have feelings, and you know that old saying about sticks and stones may break your bones, but words never hurt. You know what? That's bullshit. Words hurt, man. Words hurt, and the peers, and I am in a group of peers. Peer. I think I gave three E's. Peers. So I look at y'all as a group of peers. We are. If you weren't, I guess in the long side, if you wouldn't say that to my face to face, then most likely that's not something, not you, just you pointing out just one person, but anybody. Then, you know, because that's kind of where this, and maybe that's where the breakdown, not to get on the political side of all the crap that's going on in the world right now, but maybe some of this problem that we run into today is the divorce of 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 the free thinking thought process of just blurting out whatever you want in any kind of environment that's led to a lot of the crap that we see in the world today. So common decency and common rules apply. Check your comments before posting. You know that I can handle constructive criticism, But if it goes that negative bias slant and saying satanic stuff and going down a road of, in the end, it's just music that I'm listening to in the background. Because you know what? Believe it or not, this is a boring job. You are with yourself in front of a computer screen, and it can be quite a boring way of making a living. All right, I'll leave you with that thought. This is Dave Knight here from 123daytrade.com. Thanks for watching. Thanks for being here on Saturday, March 10th, 2018. 35 minutes. Kip, hey, it's a preaching sermon, soapbox type of day. And I went on. I had some points that I wanted to cover. We covered them. And I look forward to showing you on my vision board what I was able to pick up next week when we look at it. I look forward to showing you my new purchase that I put together, or was able to use the money, the half of that money that I took home, the $1,078, and what I got off of my vision board. Vision boards, if you don't, I'll leave you with this thought. If you don't have a vision board, I'm not going to turn it around. We'll give it another. It's just, my vision board is just a cork board behind me. I would say it's looks like a 3 foot by 3 foot, or maybe 3.5 foot by 3.5 foot cork board. And what I do with it is I put things that my kids give me, maybe even from years ago. I put up stuff on there that I want. And I can see on my vision board 3, 4 things on that vision board that trading's been that I've been allowed, but that my trading's allowed me to get, plus other things that's come off that vision board. So trading has allowed me, even in some of the worst periods of my life, trading still has cooked the bacon for my family. And it's not a bad way of living if you can get over your mental hang-ups and the things that make you do stupid stuff. So I'll leave you with that. So if you don't have a vision board, a cork board is good enough. Start with a small cork board and put something up there that you want, not what someone wants for you, but something that you physically want and desire, and put it on there and start visualizing yourself of getting it. Start small and start thinking big, but start small. Get those small victories. Get that first thing off that vision board to allow yourself to think bigger. All right? Positive thinking, right? This is Dave Knight here from 123daytrade.com. Thanks for watching. Thanks for being here. I'll see you in the next video I put together. Have a great, blessed day. Bye for now.